Hello, I'm Paul from Bezla. At a recent meeting of hospitality finance experts, many voiced the same sentiments. In order to manage financial risk most effectively, investors should prepare for the worst-case scenario. Although activity remained robust in 2023, with over 1,400 global trades taking place, the second highest number in history, average deal size shrunk to $36 million, a historic low. Driven by volatile global debt markets, investors struggled to finance high-value deals. Single asset trades accounted for 79% of global hotel investment volume, by far their highest portion in history, as portfolio transactions declined to $10.7 billion, down 59% against historical averages. Select service and luxury assets were the most favoured as investors gravitate toward lower purchase costs and hotels with established cash flow. Private equity continued to be the largest acquirer of global hotel assets. 2023 also saw a significant increase in new investors. In fact, 19% of the year's global investment volume was generated by first-time hotel buyers, the highest proportion in history. Hotels have become a preferred asset class for some institutional investors, underpinned by robust operating performance and hospitality's inherent inflation hedge. With high net worth individuals and family offices likely to invest heavily into the sector, you can expect this trend to continue. While 2023 was a challenging year, fears of a global recession did not come to fruition. However, rising interest rates led to widespread capital market disruption, putting significant downward pressure on global real estate investment. Escalating geopolitical tensions between the US and China, the ongoing war between Russia and Ukraine, the outbreak of the Israel-Hamas war, and humanitarian crisis have resulted in continued global uncertainty. Despite these challenges, the global lodging industry demonstrated resilience as RevPAR soared to a full recovery in 2023. Global resort and leisure-heavy markets, which were generally the first to recover following the COVID-19 pandemic, have started to see some normalization in demand, while urban market performance accelerated as business, group, and international travel all recover. Urban hotels are predicted to soar even further, with London, New York and Tokyo likely to attract the most investor interest. While global RevPAR has now exceeded 2019 levels by 12%, there remains room for growth. An increase in Chinese overseas travel, expected to be a major driver of hotel demand following the country's reopening in early 2023, has been sluggish, reaching only 50% of 2019 levels due to visa delays and other issues. Going forward, look for consumers to continue to prioritise travel, particularly favouring brands which align with their personal values. Hotels that display a commitment to sustainability, wellness and authenticity will have a competitive advantage to not only meaningfully increase market share, but also drive higher asset values and unlock new sources of capital. In the lodging sector, brand has never been more important as travellers' expectations continue to rise. With over 1,300 global brands for guests to choose from, it is crucial that hotels communicate and, more importantly, execute on their brand promise. Changing consumer preferences and evolving opportunities to build enduring customer loyalty have resulted in traditional hotel brands expanding into non-traditional areas. Retail is just the beginning, as hotel brands are now expanding into residences, private member clubs, and even yachts, with the goal of capturing the entire travel journey and solidifying that essential brand loyalty. Investors will be increasingly discerning in the brands they choose to acquire, as they are now buying into an entire ecosystem. Hotel owners should continue to refine their brand promises, with the potential for brand consolidation as traditional hotel brands continue to recognise the value of positioning their properties as more than just places to sleep. In summary, the hotel industry defied the broader economy in 2023, with global RevPAR soaring to a full recovery. As consumers continue to show the urge to spend on travel above all else, hotel performance is predicted to accelerate further. Travellers will increasingly make buying decisions that align with their personal values. Investors that remain nimble and prioritise innovation will have the opportunity to acquire quality assets and grow their portfolios. Brands that commit to authenticity and in particular sustainability will have an advantage. The lodging industry is currently in a good place, but hoteliers must realise that this trend will end sometime, and they should invest in properties that can sustain growth or at least maintain revenue during less prosperous economic times. If Bezla could assist with your hotel marketing, visit our website at bezla.com or call us on 888 999 8086. Thank you for watching today.